Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, and I think we can deservedly say, thank God it's a Friday, because it's just manic amount of news flow which has been hitting us. Markets yesterday did quite okay after being flat through the course of the session. Last hour, things picked up and perked up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, morning.
Morning.
Hey, morning, guys. Prashant, while you were away, we were busy trying to make sense of what the US courts do and what is US legislation like, And that's the thing with news. When overnight you have to turn into some expert or the other because news is moving at such a fast pace. And I think in 24 hours, markets have come to realize that there's a little reason to immediately cheer. This is not the end of Mr. Trump's big tariffs. The legal battle has started, and Asian markets, as a result, are decidedly lower right now.
Well, that's right. And we kickstart a new series. The last couple of series haven't been so bad. In fact, they've been rather good. So let's see what June series offers for us. But yesterday, we had a perfect end to the May series. Beautiful expiry played out. Nothing happened throughout the day. Last 60 minutes, plenty happened. So perfect, textbook kind of expiry is what we saw yesterday. But
I'll tell you guys, you were saying I was not there. I was at my kids' school PTM. And it's such a different world. There's no tariffs, there's no Trump, there's no markets, there's no nothing. It's
he's invading students' world as well these days. The whole visa situation. But thankfully, younger students. We're not there yet,
but it's all physics and chem, and it's
happier and better stuff.
Absolutely. Okay, well, I'll just quickly take you through what you need to know in terms of the session last night, because I think we'll pick it up from there. S&P was up 0.4, Nasdaq was up about 0.4, Russell, everything about, the change up on your screen. So the big story was the reversal of the reversal. So first reversal, of course, was the court blocking Trump tariffs. And now an appeals court has blocked the blockage, the first block. So the U.S. Federal Appeal Court has temporarily suspended a ruling that blocked Trump tariffs. This is, of course, important. This came, by the way, right before New York closed. So markets did respond to it. It's not as if it came after U.S. markets shut. So that's in the price in that sense, at least some of it. Now, it's not done yet, right? The appeals court could still walk back on the suspension and support the original ruling, which blocked the tariffs. So it's not done. There were other reports which said that over the weekend, the Trump administration will approach the Supreme Court. But before that, this appeals court ruled in favor of the White House and the Trump administration. So it's up in the air in that sense. Yesterday some were making the case that maybe as these negotiations go, for example, Trump saying, well, I'm going to impose 50% tariffs on EU if they don't walk the line and get it straight and sort of work with us to lower entry barriers for US companies to sell into Europe. Will the negotiating position of some of the of the US with regards to some of these big trading partners, China included, etc., weaken a little bit after what had happened? It's still a question worth asking, and we'll continue to sort of ask it, even though the Federal Appeals Court, has blocked the original blocking. Okay, now the other bit of news flow was President Trump meeting with Fed Chair Powell, and. But there was a statement from Powell, and it was clear that expectations for monetary policy were not discussed. But Trump, there's another headline with regards to Trump, and Trump essentially having told Powell that he's making a mistake by not lowering interest rates. But it's not sourced properly, so I'm not sure how much credence we should pay to it. But there was not very much by way of a market move on the back of it. U.S. economic data was concerning, so your jobless claims, and you also had the first quarter GDP the second release which came through, and details of it were slightly weaker. Now, Treasury strengthened, so yields fell about 5 basis points. We're about 4.43 on the 10-year. Dollar index was down. It's basically fallen down back under. It was looking like it's going to climb above the 100 level, 99.24. Oil prices down 1% to about $64 a barrel. So this is the broad setup. It's unclear. It's not really very directional in that sense, and things may change. The landscape has been like that. Now, yesterday, as I said, we did perk up a little bit into the close. So Nifty found support once again at the 20-day moving average and moved higher. It attempted to bounce higher, it's about 1/3% up. A break above the level remains the same, 25,116. That's a swing high. We need to go above it, close above it to confirm that a new impulse higher is starting. Immediate support stands at 24,677. Bank Nifty. It's been consolidating, sideways consolidation. Will it break higher? And for that, we need a decisive close above 55,875. The Nifty Bank graphics should come up on your screen. And on the way down, Nifty Bank is to support at the 20-day moving average, which is 55,015. All near-term 1%, essentially midpoint between lower side levels and upper side levels. But we need confirmation, basically. We've been in a bit of a consolidation for a while now. 10 points higher on the GIFT Nifty. Surabhi.
Okay, so yeah, we're a bit directionless, but I mean, the direction that Asia has chosen to take actually is decidedly lower this morning. Most of those markets, whether it's Japan, whether it's China, Hong Kong, any of the markets that you look at, they're all lower. In fact, down almost 1 to 1.5% in many of those cases. And of course, markets are tracking all these developments on the judicial side very, very carefully in terms of what happens next in the courts when it comes to Trump's reciprocal tariffs. Yesterday, there was this meeting between Fed Chair Jerome Powell and Donald Trump, and it was the first meeting between the two since Trump took office in January, the Trump 2.0 regime, so to speak. And it was a sort of well-tracked meeting for obvious reasons. We know that the U.S. president has been striking down the Fed chief, saying that he's moving too late or too slowly on interest rates, etc. And it seems that it was very clear, and this is according to a statement put out by the Federal Reserve after that meeting got done, that the US Fed chair has told the president that monetary policy will depend, quote unquote, entirely on incoming economic information. And in that release that the Fed put out, the Fed also said that the monetary policy is to be set on careful, objective, and non-political analysis. So the Fed was very quick to distance itself, saying that this was a customary meeting and nothing was discussed on the immediate direction of monetary policy per se. Speaking of more action from the US administration, Scott Bessent actually has been speaking about the next steps in the US-China trade deal. In fact, he kind of has been indicating that maybe the talks have stalled to an extent and they'll revive once again when the leaders of the two countries, Mr. Donald Trump as well as Xi Jinping, kind of step in and weigh in more directly. Let's listen in to what Scott Bessent has to say.
I would say that they are a bit stalled. I believe that we will be having more talks with them in the next few weeks, and I believe we may at some point have a call between the president and party chair Xi.
Okay, so they're talking, but maybe the leaders need to get in more, direct involvement. That's the message coming in. Finally, a quick last point out of Asia. There's inflation numbers out of Tokyo in specific, and those numbers have been climbing higher. 3.6% is the pace, and that's the largest pace of inflation increase, core inflation, since January of 2023. So inflation continues to be a big talking point in Japan. What have we done this week? We've just consolidated. The Nifty at the index level, at least, we've not gone anywhere. As you can see, 0.1% lower so far. Mid caps and small caps, that's become the story of the market because that's where we've got gains of almost 1 to 1.5% on those two indices, and of course far more on individual stocks, which brings me to the last point. Stocks and lots of earnings are expected to drive the action today. Bajaj Auto is absolutely steady. I mean, they've continued to hold on to margins. Margins are still above 20%, but one can argue whether you need to do something more to boost that top line growth. Top line has grown just about 5.8%. But then you have good names, Suzlon Energy, Lemon Tree. These are good numbers. Let's watch out for result reaction. Suzlon in particular, revenue surging 70%. The margins expanded almost 250 basis points. Then you have two losers, and I'll definitely watch out for Mazagon Dock. For all the exuberance and excitement around the defense play after Bharat Dynamics, Mazagon is the next one that's disappointed on quarterly P&L. In fact, for Mazagon, the revenue's hardly grown, 2% up, and the margins have collapsed from 17% to just about 3%. So we need to figure out what's happened here. More details coming up. And Ola, losses are only growing. At the bottom line level, the loss has now exceeded 800 crore rupees. So more on this coming up as well. But these are some of the stocks worthy of keeping on your radar today. Nigel?
Well, it was an exciting close to the series. But as you all said, the broader markets, that outperformance is something that would be keeping portfolios very, very happy. However, now we have seen the fresh supply of paper. So it'll be interesting to see whether or not the broader markets can continue to outperform from here on, though the Nifty appears to be in a bit of a band. Now, focusing on the rollovers first. The rollovers are more or less in line on the Nifty as well as on the market-wide positions. Rollovers in line with with what we have seen in the past. Moving to the Nifty open interest then. Remember in the previous series, we saw a bit of a cool-off in terms of the Nifty open interest. Now it's back to the normal levels that we've seen at the start of the previous series. So the Nifty open interest, more or less in line with what we've seen in the past. How are the FIs as well as clients positioned? Well, the FIs, they have gone a little bit more net short. So 78,000 contracts on the short side is what we have seen. This is much more than what we saw at the start of the last series. And as I always say, we like some FI net shorts in the system. While the clients, at the start of the last series, they were net short. Now they've turned into net long. So this combination actually is quite good. On stock futures, the FIs maintain their long positioning similar to what we saw at the start of the last series. While the clients, they seem to be relatively more optimistic because on stock futures, clients actually have gone ahead and increased their exposure to stock futures. Let's look at it in percentage terms then. The short positioning had come down to around 60%. Now the net short positions from the FIs have gone back to around that 80%. For the clients, they are net long at close to around 60% as a percentage of their exposure to index futures itself. Moving to the options data then, that's going to be quite interesting because the call writers, they believe they've got this covered. I've been saying that for the last few sessions as well. 25,000 call, 24,800 call, both of them, good amount of open interest built up. However, we continue to see writing at lower put levels as well, which gives you some kind of hope that in fact the lower level will get defended. So looking at the options data, looking at the recent swing high and swing low, I've got a broad band, that you're looking at. But before we get to that, one crucial trigger for the Nifty could be the golden crossover. Now, that's going to be very, very important. What's that? When the Nifty 50 DMA gets past the 200 DMA. And currently, they're very, very close on the Nifty itself. So this is going to be an important indicator in the next few trading sessions because normally that is a bit of a bullish sign. Even if you pull up a chart and if you look at the 50 and the 200 DMA, you'll see that it's very, very close to each other. So the golden crossover is something that I'll be tracking on the Nifty as well for a direction. Important point out there. But getting back to the range, well, we're in this broad range on the downside, the 24,450 mark. That's the important support level. And the resistance comes in at around 25,150. This is options data as well as swing high and swing low that we're looking at. Stocks that I'm looking at, well, I'll keep an eye out on Eternal. Yesterday as well, towards the end of trade, there was some kind of absorption in terms of the selling. For this week, actually, it hasn't been that bad. And we have the FTSE as well as the MSCI rejig that's already in works. So it's close to around $800 million of selling. It appears the domestic mutual funds are absorbing that. So it needs to hold that 215 to 220 odd mark. So I'll keep an eye out on this stock, not just for today, but for the next few trading sessions as well, post this rejig. And the big factors we need to track for the June series. First up is going to be the GDP print, then the RBI policy where we're factoring in a cut. The Fed policy is going to be important, not because of the cut, because of the commentary and the progress of the monsoons. So those are the broad cues that we're looking at for the June series. Let's see whether or not we can break out of this 1,000-point range on the Nifty.
Okay, so it's a busy June also coming up. Thanks for the heads up, Nigel. Well, let's get started then with the equity call of the morning. And this is a call that's coming in from Jefferies. Mahesh Nadurkar of Jefferies says that India is set for a second consecutive good monsoon, a positive for agri GDP growth, rural demand, and in the inflation outlook. He says continued low inflation should give more visibility on rate cuts. He believes a further 75 basis points could be possible, adding that the early onset of monsoon, however, could impact June 2025 quarter, impacting sectors like cement, capital goods, power, etc. Mahesh says TVS Motors, Bharti Airtel, Vishal Mega Mart and Godrej Consumer are their preferred picks as rural demand picks up. He says they have moved 1.5 percentage points weight from power to metals in their model portfolio. So interesting changes in the Jefferies portfolio.
Okay, absolutely. Let's welcome in Stephen Englander, Managing Director, Global Head of G10 Forex Research and North American Macro Strategy at Standard Chartered Bank. Stephen, great to have you with us here. Thank you very much for your time. Prashant this side. So does what has happened with regards to courts stepping in now, and of course, I mean, for now, the appeals court has ruled in favor of the White House, but, it kind of does show that the judiciary will step in as a bit of a guardrail in the U.S. Does it weaken, the White House's position negotiating tariffs with all its major trading partners? What's your sense, Stephen?
I think it weakens it a little bit. Certainly the the trading partners who are facing very high reciprocal tariffs. It doesn't look as if that's as big a threat now as it might have been, say, a week ago. But even then, it looked more likely that they would just roll over the 10% baseline tariff rather than, jump to the reciprocal tariffs. They do have a bunch of options. And, if you actually read the decision of the court, it's a little bit narrower, I think, than was construed. The issues seem to be that there was no limit that the Trump administration saw on what they could do on tariffs, and the court was sort of saying the authority that Congress gave them is not meant to substitute for congressional discretion. So there has to be some sort of bound, congressional review or some time limit on it or something. So, but overall, I'd say that, it's probably not great for the bond market because it may make it less likely that they get as much revenues as they anticipated. I don't think it's great for the dollar just because the uncertainty is back. Even if you're not a fan of tariffs, a world in which we're not sure if tariff on, tariff off is not a particularly good world either. So, it could be a little dollar negative, but not, I wouldn't see it as being a first order issue.
But on that, Stephen, hi, great to have you on the show. On that, let's talk more about the moves in the dollar. It's been on a gentle deceleration slope for the last several months since the onset of this year, right? Do you think we've made the lows for the year, or could it actually head lower? If you believe, or the market believes, that indeed Mr. Trump will prevail one way or the other on his tariffs?
I don't think we've hit the lows, but I think you're right that we're not going to see a precipitous decline in the dollar. For one thing, I think the market participants are scared that, about the possibilities that the, tax bill works and the tariff works, and then in 6 months, the U.S. is looking like a strong economy. It may not be the baseline, but there's enough of a risk there. What we've said is actually that there's 2026 risk, that if the economy doesn't look strong, and the deficit does go up in the aftermath of the bill, we could see real pressure on the dollar then. But I think for now, the market is going to be doing cautious selling of the dollar rather than two-handed selling.
Hi, Stephen. Good morning. Good to see you. Ben, what are you factoring in terms of action from the Fed? We started the year expecting them to do a lot, but the way things are progressing, it's anyone's guess. According to you, how many cuts do we get this year?
We're still at 2 cuts. And I think that today's meeting with Trump kind of outlines the issues that the Fed is facing, that they can't afford to be wrong on this. And they certainly can't afford to be wrong, with a political motivation. They have to play it straight down the middle. And so I think that if, as we expect, the incoming data get weaker, I think they will cut. The weakness, say we have payrolls of 50,000 and a month from now minus 50,000 or something, or 6 weeks from now minus 50,000. It's not happening in a vacuum. All of the surveys are telling them, and their own surveys are telling them, that the economy is getting softer. So I think that they'll be relatively quick to cut. The issue that they face is that there hasn't been a single piece of hard data that really says you have to cut. But if they were to get those hard data, I think that they would cut, and they would cut relatively quickly. So I think the market may be too pessimistic on the Fed over the next couple of meetings. And by contrast, I don't see the late 2025 or 2026 cuts. We'll have the tax bill, will probably be deficit increasing. I don't see what would motivate them to be cutting at that point.
And that's what they've been saying, right? That we will remain data dependent, and it will be incoming economic information that's going to guide, the shape and form of monetary policy. So let's see. Stephen, what about yields? At around 4.5%, have we seen the peak for now, or is there a further upside risk, especially because of this big, beautiful bill and the way the deficit is shaping up?
All of the above. I think in the short term, the market is quite short bonds. And that's why I think we saw such a dramatic move. It's not like there was big news today, but everybody had been selling. And as I said, I think that if the incoming data turn out to be soft and cuts, are put back in the picture, in the next couple of Fed meetings, yeah, yields would come off. But ultimately, I think that the fiscal pressure is going to be there. And, U.S. external debt has been growing as a share of GDP. The government deficit has been growing as a share of GDP. We're kind of more leveraged on the debt, both the internal debt and external debt picture than we were before. And I think that leaves us with some upside in terms of rates. We expect the 10-year to close the year closer to 5 than to 450.
It's a pleasure, Stephen. Thank you very much for joining us, and thank you indeed for being here with us today. Well, let's just quickly run you through the interactions which are lined up here over the next 2.5 hours. So at 8:35, we'll hear from the management of Cohance Lifesciences. They discuss numbers for the fourth quarter, but more importantly, the outlook. So Mr. Sharma will be with us there. 9 o'clock, Jay Kale of Elara Capital will talk about, Bajaj Auto's fourth quarter earnings. We'll also talk about Ola. And if he's got a view there, there's a big downgrade which has come through from Kotak this morning. 9:20, Karthik Kumar of Axis Mutual Fund will talk markets. 9:30, we'll have the management of Bajaj, which will, and they'll speak to us about their outlook going forward. Dipali Goenka of Welspun Living will be with us at 9:40, and we talk about their earnings. At 9:50, Pankaj Mittal and Kunal Malani of Samvardhana Motherson International will join us to discuss, numbers there. And of course, the outlook, what's happening in their business. And towards the end of the show, it's our special segment. It's the economy, Lata in Conversation with Ramesh Chand, member, Niti Aayog. Stay tuned.
Well, time to slip into a quick break. We have a lot of stock-specific action to track for you today. We get to that in just a bit in our special Top 10 segment. We're looking at Bajaj Auto, Suzlon, Shobha, Prestige Estates, Lemon Tree Hotels, and Sami Hotels. They'll all be reacting to positive news flow, while you have Mazagon Dock, Ola Electric, Amara Raja, as well as SJVN that will be reacting to negative news flow. Take that break, come back, get into further detail on all of these names.
Welcome back. So the color across Asia is actually red, very clear shade of red. Let's see if we can be an outlier, because last couple of days, the Indian market has been underperforming as well. We've been quiet when the rest of the world was moving along. So, can it be the reverse today? Because otherwise, regional markets, the Hang Seng, you can see down 1.6%. It's ditto for Japan, and the mainland Chinese market also down by about 0.5%. That's the implied open right now. It's suggesting a totally flat start. So let's see. Lots of stocks and lots of earnings to go over. Some good, some not so good. And our team is standing by with the CNBC-TV18 list of stocks to watch. Guys, morning to all of you. Sudarshan, let's start with Bajaj Auto.
Good morning. So for Bajaj Auto, it was an inline set of earnings for Q4 FY25. Company has managed to hold on to margin over 20% for 6 straight quarter. And for revenue, it was supported by double-digit growth that company has seen in premium motorcycles, electric two-wheelers, and commercial vehicles, but it was partially offset by suspension of KTM exports that company had seen in Q4 of FY25. It has also announced final dividend of rupees 210 per share. Now, talking about the final numbers, profit, revenue, and EBITDA have increased by 6% each, and margin has come in at 20.2% versus 20.1% in the same quarter last year. About the outlook for domestic industry, company is expecting a growth in the range of 5 to 6%, almost at the same level that industry had seen in FY25, and for exports, it's expecting a healthy growth, and that would be in the range of 15 to 20%. One thing that would be in focus is the company's commentary about the rare earth magnet supply from China. Company is saying that any delay or disruption in the supply may impact the output by July. But on the back of earnings that were in line, I'm going with green for Bajaj Auto.
Well, in fact, we'll have the management of Bajaj Auto who will be joining in at 9:30 a.m. to detail their numbers as well as the path ahead. All right, let's focus on Mazagon Dock then. Ria joins us to help us out with a quick analysis on that particular name. Ria?
Well, yes, good morning. For Mazagon Dock, the Q4 has been quite weak, although the full year performance has remained healthy. Focusing on Q4 first, the profitability has been sharply lower. EBITDA and net profit have fallen by around 83% and 51% respectively, both on a year-on-year basis. Margins have also contracted by over 1,400 basis points on a year-on-year basis, and they've declined by around 2,300 basis points on a sequential basis as well. Now, this profitability has been impacted by significantly higher expenses in this quarter. Subcontracting expenses have gone up by over 9 times over the previous year. Provisions have also gone up by around 5.6 times over the previous year. Now, in the Q3 earnings call, the company had said that these provisions have been created for excess inventories from ships with expired warranties. And while the components are still in good shape and may be used in future projects, these provisions are expected to be reversed upon utilization. Apart from this, the full year performance has remained healthy. Revenue and margins are above guidance, but today we're expecting the stock to open in the green because of the weak Q4 performance.
All right, Ria, thank you very much for that. Let's talk about Ola Electric now. Sud is here with that one. Amara Raja is also something we'll focus on. So, good morning.
Good morning, Prashant. So for Ola Electric, it was very weak Q4. But if we believe management's commentary about Q1 outlook is looking healthy. So now talk about the numbers. Losses have expanded both sequentially and year-on-year. For Q4 FY25, company has reported loss of rupees 870 crore versus rupees 416 crore that company had reported in the same quarter last year. Revenue was down 62%. EBITDA loss has increased to rupees 695 crore from rupees 312 crore. But now talking about the outlook, company is saying that adjusted revenue growth may be in the range of 23 to 31% in Q1 FY26 if you compare from the level of Q4 of FY25. Deliveries are seen increasing by 28%. Adjusted gross margin may increase to 28 to 30% from the level of 19.2%, and auto EBITDA margin may be minus 10% from minus 78.6% that company has seen in Q4 FY25, and on consolidated basis, EBITDA margin may be minus 25% in Q1 of FY26 versus minus 101.4%. But on the back of earnings of Q4 FY25, I'm going with red. Now talking about Amara Raja, it was an operationally weak quarter. Profit was down 30%. Revenue has increased 5%, but EBITDA has fallen 17%, and margin too has seen a fall of almost 300 basis points. So I'm going with red for Amara Raja too.
Okay, all right, got that, Sudarshan. Thanks very much for that. Let's move on to some more numbers. We have Vivek joining in, Suzlon Energy and SJVN. Vivek, hi, morning. Suzlon looking good?
Good morning. Suzlon looking very good indeed. A very healthy Q4, very healthy FY25. And from the con call yesterday, appears that FY26 is going to be very strong as well. Let's have a look at how Q4 panned out, led by very healthy volume delivery at almost 573 megawatts. Revenues higher by 73% on a year-on-year basis. EBITDA up 94% on a year-on-year basis. Margins higher by 200 basis points, largely led by the healthy order mix as well as a higher portion as far as the OMM part of the business is concerned. Profitability, optically much higher, almost 4x times jump, but largely aided by a deferred tax gain that the company saw of around 600 crore. Despite that, our profitability is still quite healthy. Now, when you're talking about the order book is quite strong at 5.6 gigawatt. It has moderated on a sequential basis, but we need to see what is the kind of order accretion that the company has as far as Q1 FY26 is concerned. Now, the interesting part is from the order book, 91% is from the newer generation S144 wind turbine generator, which ensures that the company now will have a structurally higher EBITDA margin range. Now, as far as the FY26 guidance is concerned, all of the key monitorables for Suzlon, the WTG volumes, revenue, EBITDA and PAT, the company has given a guidance of a 60% growth on a year-on-year basis. Along with that, the WTG segment contribution margin has been guided much higher at 23%. Now, coming to SJVN, a muted quarter as far as Q4 was concerned. Revenues are higher on account of much higher installed capacity and higher blended tariffs. However, the power generation volumes fell 4% on a year-on-year basis. So revenues are up 5%. EBITDA on a year-on-year basis was flat. EBITDA margins has dipped on a year-on-year basis, almost 200 basis points. And it's a loss largely due to much higher operating expenses that the company has seen across the board. So loss of close to 128 crore versus a profitability last time of over 60 crore, going with the red as far as SJVN is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, Let's hop across to Ria. She's back with us to tell us about a couple of real estate companies, Prestige as well as Sobha. Ria?
Well, yes, Nigel, both Prestige and Sobha have reported their quarter 4 numbers today. First, coming to Prestige, the quarter 4 revenue and EBITDA have declined by around 29% and 35% respectively, both on a year-on-year basis. But remember, as per the operational update in FY25, the pre-sales were also down by around 19% on a year-on-year basis, which was an impact of deferred launches amid approval delays. Collections had also fallen short of guidance. But going ahead, the company plans to launch projects with a total GDV of around rupees 42,000 crores in FY26 compared to just about 26,000 crores of launches that we saw in this year. So that has remained strong for the company. One other highlight here is that the DRHP for Prestige Hospitality Ventures was filed with SEBI on the 24th of April in this year. So going with the green for this stock because the launches going ahead will be quite strong. Coming to Sobha, good performance in this quarter. Revenue and EBITDA have gone up by around 63% and 52% respectively, both on a year-on-year basis. Collections have gone up by around 21% sequentially and by around 7% on a year-on-year basis. The sales value has also remained strong, going up by around 32% sequentially. So expecting this one to open in the green as well.
All right. Ria, thank you very much for that. Now, Lemon Tree Hotels and Sami Hotels. Next one's in focus. Mangalam is here. Mangalam, morning.
Good morning. So no surprises here. Beautiful numbers coming in from both these companies. Hospitality sector is on its structural tailwind, and that's exactly what's taking place. 15% revenue growth for Lemon Tree Hotels, 19% EBITDA growth, margins of 50% among the highest in the industry that we've seen, and the net profit at around 29% as well. What led to this growth? Occupancy increase of nearly 557 basis points, led largely by their Aurika brand. Remember last time they opened the Mumbai Aurika. So from there to now, occupancy ramping up is a margin accretive for them. Management fees increased by about 16% as well. And we saw average room rate increase by 7% and total debt coming down by 10%. So no problems for Lemon Tree Hotels. Sami as well. Remember recently they got some funds from GIC that improved their balance sheet all in all. And operating leverage is showing in their fourth quarter numbers as well. If you look at it, revenues grew by about 14%. EBITDA grew by 42%. And on a low base, the net profit actually nearly quadrupled from 11 crores, went all the way up to 45 crores. And this, again, has been led by a combination of occupancy and ARR growth. So revenue per available room grew by 21%. Balance sheet improved. Net debt came down from 2,064 crores to around 1,428 crores post the GIC investment. So all in all, good numbers for the hospitality space.
Checking in on the green side, all the hotel guys. Got it. Thanks, Mangalam, for that. Let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow are Bajaj Auto, Suzlon Energy, Sobha, Prestige Estates, Lemon Tree, and of course, Sami Hotels. Stocks with negative news flow would be Mazagon Dock, Ola Electric, Amara Raja Energy, and SJVN, all on the back of numbers. Okay, that's the stock list. Let's find out what's happening in the world of commodities. We have Manisha joining in with the latest. Manisha, when you go to bed, tariffs are on. When you wake up, they're off, or vice versa. It's a crazy world almost, right? What's the latest in commodities? How are the commodity markets digesting all the volatility?
Oh, well, we've been choppy as well when it comes to commodities and currencies. And you have to take a look at crypto, by the way. We've seen some profit taking happen in that as well. But I'll start with the crude oil prices because we are headed for a second weekly decline. Apart from what's happening in US and in sense of tariffs there, it is also about the OPEC Plus meet, which is on 31st of May, and they will decide production for the month of July. Well, they have been increasing production, and that has continued to weigh onto the market. It also is going to be about the IEA report, which is warning of a weak demand in China. The U.S. crude inventories also have seen a bit of a decline. And then there are potential new U.S. sanctions on Russia that the street is also looking at. So all of those factors weighing onto the market. In metals as a sector, the month of May has been quite interesting. We are closing May on a positive note for gold, silver, and copper. Aluminum and zinc, though, continue to see a bit of a decline. And today, the markets also are reacting to the U.S. data. The GDP numbers for the first quarter have contracted by 0.2%. The jobless continuing claims are the highest since 2021. The dollar index also has come off below 100. So that, in turn, also seems to be supporting gold at this time.
Okay, all right, Manisha, thanks a lot for that. Well, for the time being, though, we'll take a short break. Up next, we'll have the management of Cohance Lifesciences who'll be joining in to detail their numbers and how do they see things ramping up from here on. Later on, we'll also get chatting with Siddhartha Khemka of Motilal Oswal Financial Services. We'll get to some fundamental analysis. So, a little bit of that break, come back. We look forward to those chats.
Welcome back. Well, the first company on our radar is Cohance Lifesciences. The company reported a healthy performance in the CDMO segment, but margins have been coming under pressure. And before we sort of get to more details, and of course, we'll have Vivek Sharma, Executive Chairman at Cohance Lifesciences, joining in. Just want to tell our viewers a little more about the company as well. This is formed by the merger of RA Chemicals, Arva, ZCL, Suven Pharma, and a bunch of others. And it's the first time the merged entity is reporting numbers, so it's important to understand the business. The main segments in which Cohance operates is CDMO, API, and specialty chemicals. For now, let's come to the numbers. Let's flash the numbers for you. Revenues up 20%. The margin has seen some pressure in the fourth quarter. Margins actually come down from 36% to 31%. But if you talk about the FY25 full year performance, and revenue is up 9%. And again, the margin is under a bit of pressure. So let's understand the business model and the outlook going forward. Like I said, we've got Vivek Sharma with us. Mr. Sharma, thank you very much for joining in. So give us a sense, let's break this down in terms of CDMO, which is your big business, and you expect that to be the biggest, I think 90% of your revenue. You're targeting that by 2030, 90% of your revenue will be from CDMO. Let's look at the performance right now. Tell us a bit more about the top line growth and why margins have been under pressure for you in the fourth quarter and the year as a whole.
Good. Well, good morning, and thanks for giving me the opportunity to come and talk again. So I think let's talk about Cohance brand. You started with that. So we're very proud that today we are talking as one company, one brand, one new logo, one vision. This has been a journey that has taken almost 5 years to bring 6 promoter-driven companies to combine into one platform. That is now actually sitting at a mid-cap company with the current valuation, right? So it's a huge accomplishment for the team and the support that the investors has given and the customers have given. In our company currently, there are 3 main segments: CDMO segment, which is what you would like to talk about, a specialty chem segment, and an API plus segment. All 3 segments are growing, and all 3 segments we anticipate will continue to grow to achieve the accomplishment of our long-term vision that we are demonstrating. As part of growth and as part of integration and as part of internationalization, we have been investing capital in certain types of resources to really build a long-term pipeline and to expand our customer base. As you know, we acquired 2 technology-driven CDMO last year, Sapala in Hyderabad and NJ Bio in Princeton, New Jersey, that has given an upper leg in terms of technology and ability to serve customer on high-end modalities and solve complex problems that companies are looking at. We have also invested in commercial capabilities in the West. So we've hired 5 highly experienced and highly capable commercial individuals that sits in the West. We've hired a highly capable individual.
Mr. Sharma, sir, I'll apologies for interrupting. I'll request you to be a little more brief because this is pre-market open. We'll only have 5 minutes on the call remaining.
Okay.
Very quickly to get to the numbers. Top line growth, like I said, for the year as a whole, if I look at the total business, you've grown about 9% at the top line, but margins are under pressure. Just want to understand why and what's the outlook both on revenue and margins for FY26.
So margins mainly under pressure because of the investments in growth areas. That includes hiring of people to allow us to really get into more commercial roles and sales. That was a big investment we did last year, which we shared with you last year. And the results of that has started coming. We are getting RFPs that we had not gone before. We are building relations. We are adding logos that we have not added before. And that was a one-time deliberate effort to invest in those resources that is putting an impact on the margin. In terms of growth this year, all 3 segments of the business are targeting to growth. We are talking about accelerated growth that we will deliver this year, and margins will be in 30s that we are committed to grow and take the business to.
That's a solid margin, 30% plus. Mr. Sharma, good morning. Prashant here. Are you, nowadays my go-to question for CDMO or companies like yourselves is whether you're working on a GLP-1 or are they your customers in any which way?
So
can you tell us?
Yeah, no, we can. We have a lot of customers. GLP-1 is not of them right now, but things changes. But we're very excited with the current customers we work with. They solve a lot of complex problems in oncology and diabetes and CNS. And we see a lot of opportunities with them to continue to grow and create value. GLP-1 is aspirational for us, and we hope we will be able to crack that at some point.
It's attractive. I mean, if reports are to be believed, it will be the largest category of drugs, right?
Yeah, that's right. But listen, I mean, there are others that are also increasing, and there's a lot of money going, right? So ADC is still a very hot area. Oligo is coming up, and there's a lot of hot areas. And I'll be honest with you, we can't do everything that is required, right? So we have to do what we do, we have to do good, and that's
obviously
what we focus on. And if there's opportunity to acquire a GLP asset, we'll be happy to do that. Organically, we can do limited work, and we're working on that. But right now, focus is on growing what we have and making it better.
Okay. So let's talk about the CDMO business. I mean, overall, you've said, I think in the investor call as well, that you will be targeting double-digit growth this year. If you could kind of give us some more color, will the CDMO business grow in like early teens or mid-teens? And as you get more logos, more customers signing, and I think you have a lot of requests for proposals as well in the pipeline. So just tell us, at what rate will this business grow, and what is the steady state, sustainable margin profile for the CDMO business in particular?
Yeah, so growth is a reflection of efforts that the team does. So we have a very strong pipeline of early stage projects that are moving up and will become commercial. So we've been publicly saying that we are sitting on 9 phase 3 products with 15 projects that have been working on with all innovator companies. And happy to share that 4 projects out of these 15 are getting commercial this year. So that will be a contributor to the growth. We have also signed RFPs recently from a very large pharma company that are moving its commercial footprint from China to India. There are phase 3 projects in that RFP, and there are some commercial projects in that RFP, and we expect to hear some result and outcome of that in Q3 this year. So there are multiple drivers of growth. Now, this is in addition to the organic work that we do, the R&D early stage work, right? So that will do. In terms of margin, so, there are efforts going on. We're adding logos. We've just added a logo of a top 5 pharma company. We're doing some early stage work with them. We've done 3 projects for them. They are visiting us in Hyderabad later this year to qualify.
Out of all your clients, sir, what is total US exposure right now? I mean, if I try and understand this as a percentage of your CDMO revenue, how much is coming from US-based pharma companies?
So we have several US customers, but a significant portion of our business goes to Europe. Okay, so larger customers in Europe, quantity of customers in US is big, but the value of them are small right now.
Okay, and the CDMO margin? So just very quickly, 10 seconds.
But mid-30s is what we have been guiding, and will remain guidance.
All right. We'll speak again, sir. Thank you very much for joining us. Appreciate you being here on the program. Thanks indeed.
Thank you.
Well, let's welcome in Siddhartha Khemka, who is now with us. He's Head of Research, Wealth Management at Motilal Oswal Financial Services. Sid, good morning. Good to have you here. Thank you very much. This is an exciting space, the CDMO space, and we had Cohance with us, and we've had so many other companies speak to us over the last 2-3 months. What's the strategy? I mean, it's if one wanted exposure, and one should have exposure in this space, if this is going to be, it's going to become big in terms of size, scale, etc. Own a bunch of these businesses, or anyone in particular, if you have coverage, Sid.
Yeah, good morning, Prashant. Yeah, glad to be on the show. I think, yes, it's an exciting space within the overall healthcare segment. I think US generics has its own challenges, and in that space, CDMO as a segment is emerging as a good growth segment. Plus, there are a lot of opportunities, as you rightly highlighted, the GLP-1. A lot of Indian CDMO players are focusing on that segment and are benefiting out of it. The best way, as you rightly said again, is to play through a basket. It's very difficult to pick one stock while we do have our top picks, but because you have a lot of regulatory challenges, you have the segmentals, geographical expanse. So what we like DVs among the larger ones, Laurus Labs in the mid-cap space. Cohance, we don't have coverage yet, but definitely an exciting space or the entire CDMO space to be in. And within the healthcare pharma space, that's a segment to go with.
Okay, all right, got that, Siddharth. Morning. By the way, the numbers on the defense side, first we were discussing Bharat Dynamics disappointing. Now look at Mazagon Dock. I mean, we have to find out what happened. Margin has gone from 17% to about 3%. So clearly, I mean, this is lumpy, you understand that. But given how the stocks have run up, your assessment?
Maybe I think generally, yes, these are lumpy businesses, but Q4 generally tends to be a much better quarter and a higher base. I think we need to understand what happened there. Definitely, stocks have moved up in anticipation of the long-term growth opportunities, the defense orders that have come in. But with these kind of numbers, definitely it warrants a closer look. We have coverage on BEL and HAL. We unfortunately don't cover Mazagon Dock yet. BEL came out with strong numbers and the outlook remains strong. So we see at least 18-20% earnings growth. Valuations at 34-35 times looks attractive. So we maintain a positive view on Bharat Electricals. That is our preferred pick within the overall defense space.
Okay. Hi, Sid. Good morning. Nice white jacket. I think it's whitish or it's a light grey. Looks like you're all set for Friday, Sid. That said, what about some numbers that came yesterday? Bajaj Auto, how do you read those numbers? The management is guiding far optimistic on export sales rather than the domestic piece, more or less in line with what the street was working with. Your view on the stock?
Yeah, hi Nigel. Good morning. Thanks. I think it's a slight grace jacket for sure. In the light, I think it's looking white, but
whitish. Yeah, I was wondering.
So coming to Bajaj Auto, yes, numbers have been pretty in line, broadly in line with our expectations. Margins have remained stable at 20.2%. We are seeing benefits from the favorable currency as well as improved mix. While there has been some impact of stoppage of exports to KTM and the higher promotional spend. Overall, what we see that the recovery in exports and the healthy ramp-up in the Chetak and three-wheelers are key positives. However, what we are also seeing is that there is a market share loss in the domestic motorcycle segment, that too in its key segment, that 125cc plus segments, and that we see as a concern. Further, the ramp-up of its CNG bike, that is Freedom, that has been slower than expected. Yes, another positive, the acquisition of the controlling stake in KTM in a lucrative deal, that is also positive, and we'll need to see how effectively and how quickly the turnaround of its operations are. So net, while the results are positive, the stock could see some positive momentum today, but largely because of the loss in market share and some of these key monitorables of turning around KTM, we remain neutral on Bajaj Auto.
Okay, all right. So that's stay on. We'll have more questions for you in just a bit. But do have to take a quick break right now. We'll come back on the other side, get in some more fundamental stock ideas and today's technical trading setup. We'll have Mitesh Thakkar and Shrikant Chauhan join in.
Welcome back. Hope you're having a good morning. Well, we kickstart a new series today. We weren't short of action towards the end of the series yesterday. And the last couple of series actually have been good. How do things pan out from here on? Well, we have Mitesh who joins us for a quick technical check on the markets. Hi, Mitesh. Good morning. Good to see you. And as always, April was good. May was good. June's going to be good or not? What's the trade on the Nifty?
I think the good morning. The overall direction still is on the positive side, but on an immediate basis, I've been calling for a consolidation. I think 25,050 on the upside is the level which the Nifty needs to break. It might do that in the next couple of days, but till that happens, I think we are slightly cautious on the index, waiting for intraday declines to buy into. And on the downside, 24,500, 550 is a very strong support zone. That's the lower end of the range. In case you get it there, I suspect that will be the case. But in case we do get a decline over there, that's the best entry point. So the bias is positive, but on an immediate basis, I think the market could be spending a few more days into consolidation.
Okay, all right. That's good advice, Mitesh. In terms of specific stocks, what would you recommend?
Morning, Prashant. I have more of buy calls today, very clearly in line with the belief that eventually the markets will break on the upside. So a buy on a couple of metal names, which is Hindustan Zinc. Keep a stop at 458. Look for targets of 480. JSL, Jindal Stainless, that's a buy with a stop at 657 for targets of 695. Also a buy on Crompton with a stop at 354 for targets of 370. And one sell call. I think both MRF and Apollo Tyres gave some kind of a negative breakdown yesterday. So I've chosen Apollo as a short-term sell call. Keep a stop at 487. Look for targets of 462.
Okay, all right. Got that. Mitesh, thanks very much. Coming to Shrikant now. Shrikant, what's the approach that you will take? Index, stocks?
Good morning, Surbi. Good morning, everyone. For Nifty, it is in the range. It is not crossing 25,150. It is not breaking 24,500. In between also, we are seeing the markets are trading at equilibrium level. So broadly, I am of the view that we need to be more and more stock specific. But in case today market breaks the level of 24,650, then in that case, the chances of falling to the levels of 24,500 or 450 would turn bright. So we need to be careful, or what we can do is that we can trail our stop loss to 24,650 for holding any long position. But yes, there are a number of stocks which are really doing well, and a few of them have crossed their important levels, like Cummins India. It was under the levels of 3,000 for a longer time. Now it has broken that. Based on its technical setup, I am expecting this stock to move towards 3,700, 3,800 in next few weeks. It will take some time, but it's a positional trade to buy. But with a short-term view also, even at this level, 3,170, it's a buy with a stop loss at 3,090, and we can keep a target of 3,500. The other stock which we like is Maruti, which is around 12,400. There also we can keep a stop loss at 12,200 for the target of 12,750, 800 on the higher side.
Okay, all right, got that. Gentlemen, thanks very much for the trading calls. We do have to take a very quick break. Come back on the other side. We'll have the pre-opening rates, and also Jay Kale of Elara Capital will be joining in. We'll discuss Bajaj Auto's performance in the fourth quarter. Welcome back. Well, let's go back for a couple of ideas with Siddharth. Siddharth, so you tell us, it's been a whirlwind earnings season, winding down finally. So give us one or two top ideas.
Sure. So going with the recent updates, yesterday Suzlon came out with strong numbers. We recently initiated the stock. Strong set of numbers, above, much ahead of our expectations. And what is also important is that management has maintained its positive outlook and has guided at least 60% growth in terms of deliveries for the next year. So we believe that the strong delivery could continue, and that could again lead to re-rating. Stock had corrected from its previous highs and now looking attractive, both in terms of business as well as in terms of valuation. So that is something that we believe can continue to do well in the mid-cap space. What also looks interesting is that some of the companies, so for example, the hotel sector, that continues to do well. Lemon Tree in the mid-cap space, that came out with strong numbers. Again, we believe that within the discretionary spending, the hotels or the leisure travel in India, that continues to be pretty strong. And in that space, in the mid segment, Lemon Tree has a strong positioning. Some of its newer initiatives, the Orica brand, that is picking up now and is contributing to the overall profitability. So that's another stock in the mid-cap space that we believe can do well. So Lemon Tree is a buy with a target price of 190. Suzlon, as I said, we have a buy rating and a target price, revised updated target price of 83.
Okay, all right. Sid, before we let you go, any view on Welspun Living? The textile business, there is hopes out there. The flooring business actually is not able to scale up. Just looking at the past numbers. But there could be an opportunity out there with the India-UK FTA being signed. Hopefully, India gets a favorable deal from the United States as well. Any view on the stock?
Nigel, unfortunately, we don't cover this space.
From the textile space, you all don't have any pick at all. Okay, all right. Just one more quick question. From the pipe makers, you know, we have all sorts of pipe makers. I think APL Apollo is the one that you like, right? The pick of the pack?
Yes, Nigel.
Got it. Okay.
So within the pipe segment, APL Apollo is the only one that we cover. Astral is the largest one. But if you look at APL Apollo is more into the structural pipes and not into the PVC pipes. After a very long time, numbers have started coming in strong. Q4 led by a healthy volume growth of 25%. We are expecting demand to recover, margins improvement to be supported by capacity addition across geographies, and also higher exports. So that's a stock in the mid-cap space. Again, we have a target price of 1920 on APL Apollo.
Okay. All right. One more before we let you go, Sid. The cement pack, you know, delivered actually a rather good set of numbers, little better than what the street was estimating. And things were looking up for first quarter. However, the early onset of monsoons could spoil the party. From there, what do you like?
Yeah. I think cement has been a mixed bag in that sense. Some of the larger ones, Ultratech, JK Cement, JK Lakshmi Cement came out with pretty strong numbers. Monsoon this year expected to be much ahead of the normal, and that could lead to some impact in the near-term volumes. But the long-term trend, we believe, will continue to be pretty strong. We like JK Cement. We have a buy rating with a target price of 6,000. We believe that, again, while Q4 numbers has been pretty strong, JK is one of our preferred picks in the cement sector. We are expecting a good growth in volumes, better profitability. Even the UAE plant for JK Cement is picking up pace, and that is also contributing positively to the overall profitability. We have forecast a revenue CAGR of 15% and a net profit CAGR of 30% over the next 2 years. And that remains our top pick within the cement pack.
Okay, all right, got that. So that lots of ideas today. Thank you so much. You have a great Friday, and we'll connect again soon. Thanks for joining in. Okay, that's a view coming in from Motilal Oswal Financial Services. Right now, we're putting the spotlight on the auto space, and specific Bajaj Auto. The company came out with a very steady set of numbers for the fourth quarter once again, and the margin continues to be above 20%. I think it's the 6th quarter in a row. But what's the outlook ahead? The issue is growth and the top line. Let's discuss this with Jay Kale, Executive Vice President Research at Elara Capital. Jay, great to have you on. And that's the thing, right? I mean, it's fantastic that Bajaj is managing to hold on to its margins. Great. But what about growth? I mean, I think numbers for this year, top line is up about, 5.5% or so, 6% nearly. And the last couple of months, in terms of just the sales volumes, they've been patchy. It's if anything, it's actually exports that have been driving the performance. The story is quite turned compared to where we were, say, 2 years back. Your sense?
Yeah, absolutely. Good morning. We've seen, in terms of margins, if I have to look at Bajaj, I think probably very few companies who are so resilient in terms of margin delivery, especially in the last 1 or 2 years. So I think that seems to be one thing that Street would be taking for granted, that 20% margin is a given for Bajaj. Yes, the top line is an issue, especially in the domestic motorcycle segment. Now, what has happened in the last 1 year is that in the two-wheeler industry, a majority of the growth for the industry has been led by the ICE scooter segment, where Bajaj is absent, whereas motorcycle segment in the domestic market has kind of been muted. And within that also, Bajaj has lost some bit of market share. So I think that market share loss in the motorcycle segment also continues in the last few months. And we need to see when that gets arrested. Management did highlight of certain new launches coming in where they believe that will aid some bit of market share gains for them going forward. They've guided for an above industry average growth for themselves in FY26. While that needs to be seen, the new launches need to be key. The problem with them has been that, Freedom CNG bike, where a lot of hopes were built in for market share gains in the last 8-10 months, hasn't fired as much as expected. So that has really tempered down expectations for the domestic growth. And I think it's the exports which will be, give them the cushion of overall volume growth, as will the three-wheelers product interventions that they'll be doing.
Jay, sorry, just to come in over here. What is your estimate for volume growth, domestic motorcycles for Bajaj? Maybe, I don't know, first half or full year, maybe full year is too long. But give us some sense. What are you expecting in the next couple of months? Pure volume growth on domestic motorcycles, the bread and butter, the big domestic business.
I think, our growth estimates are more on the full year side. So we're expecting around 4 to 5% motorcycle growth for themselves, largely in line with the industry for FY26. And of course, what will also drive growth for the domestic two-wheeler for them is the EV Chetak. EV two-wheelers, I think they've been doing pretty well. That growth will be much higher than this, but overall domestic motorcycle segment will be in the mid-single digit kind of growth rate for them.
Jay, stay with us. By the way, we'll of course speak with the Bajaj Auto management a little later on the program. But Jay, wanted your views on another space, the electric vehicle space specifically. But before I come to you, let me just go across to our colleague Sud, who covers the auto space closely. And the Ola numbers came out, and I think there is the street is making of it as well. So take us through that.
So for Q4 of FY25, it was an operationally very weak quarter for Ola Electric. Losses have expanded both on a sequential basis, also on YOY basis. But outlook given for Q1 of FY26 is looking healthy. Company is saying that adjusted revenue growth sequentially in Q1 of FY26 might be in the range of 23 to 31%. Also, deliveries may increase by 28% sequentially. And it believes that in FY26, it will achieve break-even in auto segment EBITDA. But commentary from brokerages is looking mixed. Kotak Institutional Equities has downgraded the stock to sell, and target has been cut to rupees 30 per share, which is 60% lower than its listing price of rupees 76 per share, and almost 80% lower if you compare from the live high that stock had hit. Now, Kotak says Q4 EBITDA loss came in much above expectations. Also, EBITDA loss is driven by higher warranty provision and weak volume print, and it expects EBITDA losses to continue, and company's future hinges on scaling up volumes and successful motorcycle foray. Goldman Sachs, though, maintains buy call with a target of rupees 70 per share. It says company's decision to bring vehicle registration in-house has impacted volumes in Q4 FY25, but also as per GS, outlook given for Q1 of FY26 is looking healthy.
Okay, all right, got that. Thanks very much. For the time being, reacting to those mounting losses, 870 crores of a loss at the bottom line. Thanks for that. So very quickly, going back to Jay. Jay, you were just talking about this, that even for Bajaj, you were saying it's not so much the motorcycles, but maybe the EV side. Chetak is going to, drive volumes better this time around. Coming on Ola, I don't know if you have coverage on the stock or not, but it's just not getting better for the company. What's the advice?
I mean, we don't have official coverage, but our view had been, even 1 year back that we had written a note that the incumbents, at that point of time had not ramped up the distribution network as well as their product portfolio. And once that happens, obviously there will be some shifts of market share happening. We have seen TVS and Bajaj ramp up quite well on the EV two-wheeler side, as has, kind of Ather with its strong product positioning. But I think TVS and Bajaj, our view is that, they will outperform in terms of EV two-wheeler growth rate going forward in the next 1 to 2 years. I wouldn't be able to comment specifically on Ola as it's not on the official coverage.
Okay, you told us that for Bajaj, expect about 4-5% growth for the motorcycle business this year. What about the overall portfolio? I mean, what is the total top-line estimate that you have for Bajaj? Because the margin is not a problem at all. We're only discussing top-line growth. So what are you expecting this year?
Yeah, I think, double-digit growth for the exports. So that Bajaj does get a decent amount of almost half of its volumes and revenues coming in from exports as well. So I think that will kind of push up revenue growth to double digits for Bajaj. And with stable margins or marginal increase in margins, you could expect a healthy mid-teens kind of an EBITDA growth for Bajaj.
Your top pick, since we're discussing two-wheelers, very quickly. Top pick or picks in the space?
TVS Mahindra, followed by Maruti and Bajaj.
Yeah. Okay. All right, Jay, got that. Thank you very much for joining in. So that's a lowdown on the auto space and some ideas going by the earnings analysis that we've got for you. Let's quickly go back to Mitesh, 9:10 call, and let's also take stock of where the market is, where the pre-open is settled 21 points lower, so not too bad for the Nifty. Mitesh?
I'll go with the buy on JSL or General Stainless for targets of 695.
No, absolutely. Got that. By the way, any thoughts on Ola here, Mitesh?
Not much, Prashant. I think, the stock has been clearly showing signs of declines. I think if the stock manages to bounce back from this bad news, or reversal will happen only if the stock starts getting past 57, 58. Otherwise, a retest of 46, 45 is very likely.
Mitesh, by the way, I have another stock for you. Let's pull up Mazagon Dock. This is a real disappointment because of what's happened. Remember, the top line growth is just 2.5%, 3%. And the margin has collapsed from 17%, nearly 17%, to 2.8 or 2.9% this quarter. And that's the disappointment that's reflecting on the screen. Well-celebrated stock, but running into some rough weather today at least. Mitesh, levels to watch now. What to do with Mazagon?
Should be one thing, before I go into Mazagon. All the defense stocks are extremely overbought in the short term. So expect any bad news to see, a strong profit booking. Similarly with Mazagon Dock, I think the first target should be around 3,500 zones. In case we break below that, maybe some more pullback is possible because the stock has rallied from 2,200, 2,100 to about 3,700 now. So, 20-30% kind of retracement can easily happen of the entire rise, which is roughly about 300 to 400 points.
By the way, Surbhi, last editors roundtable, I put that piece on the earnings upgrades and downgrades. The number one downgrade was another defense, actually not completely defense, but in the same space as Mazagon, Cochin Shipyard.
Yes, I remember that. Correct.
Over the last 1 month, and this piece was 4 trading sessions old, so it's not that old. Basically, over the last 1 month, Cochin has seen about a 36% downgrade for its F526 earnings. It's not stopped the stock though. I mean, the stock has been. I just looked at it over this week as well. It's been inching higher. But that's it. I mean, those are 2 shipyards, and what a move they've had. Garden Reach, Cochin, Mazagon, all of them really through the roof. Actually, on that note, let's just quickly bring in Ria as well to revisit the Mazagon numbers. Ria, take it away.
Well, yes, good morning. The Q4 numbers have been quite weak for Mazagon Dock, although the full-year performance has remained healthy. First, looking at the Q4 numbers, the profitability has been sharply impacted this time around. EBITDA and net profit are both down by around 83% and 51% respectively on a year-on-year basis. EBITDA margins have also contracted by over 1,400 basis points on a year-on-year basis, and they've contracted by 2,300 basis points sequentially as well. Now, this profitability was impacted by significantly higher expenses in this quarter. The subcontracting expenses have gone up by over 9 times on a year-on-year basis, and even the provisions have gone up by around 5.6 times compared to the previous year. Now, in the Q3 earnings call, the company had said that these provisions have been created for excess inventories for ships with expired warranties, and while the components are still in good shape and may be used in future projects, these provisions will be reversed upon utilization. Apart from this, though, the full-year performance has remained healthy. Revenue and margins have been above the company's guidance. And another thing to highlight here is that today the stock is going to enter the F&O segment, so it will also garner some increased trading interest today.
All right, Ria, thank you very much for that. So that's Mazagon, which is at least starting lower. The other one is Birlasoft. Now, Birlasoft has seen a very steep Q-on-Q revenue decline. The numbers came out Wednesday evening, 28th evening. It didn't react in a big way yesterday, but I think there is a call from Macquarie this morning. Rima has got that. Rima, morning.
Indeed, Birlasoft numbers were out 36 hours back, but we're highlighting it today because Macquarie has sharply downgraded Birlasoft's target price, lowered it by 45% to 350, which is lower than the current market price of 412. They've now downgraded it to an underperform versus an outperform. They said that way back in August of 2024, that's less than a year ago, the company, Macquarie, had upgraded Birlasoft to an outperform from a neutral on expectations that revenue will accelerate and margins will improve towards 15 to 16%. But both the metrics have disappointed. Now Macquarie has lowered the revenue forecast. And just to recap your memory, in Q4, revenues for the company declined by 5-6% on a quarter-on-quarter basis. And even on a year-on-year basis, revenues were sharply lower. And they're saying margins will remain under pressure in FY26. Recovery will take place only in FY27. So therefore, target price slashed to 350 rupees. And now they're saying the fair value should be 15 times in terms of a multiple versus 27 times. The stock is down 32% in the last 1 year, but this month itself, it went up by nearly 5%. And in the last 3 years, the return has been fairly meager, just about 16%.
All right, Rima, thanks very much for that. Mitesh, Birlasoft, any thoughts as it starts this morning?
In fact, yesterday or day before, I think I had a buy call which hit the targets of 440, and the stock isn't looking bad. But I think with the news which has come in, I think a good chance that we might see the stock head towards 380, 385 zone, which is where a good support comes in. In case you break below that on a closing basis, we'll look at further declines.
Okay. All right. Just one more point, guys. Later today, there'll be the MSCI rejig that takes place. And India on the whole will see net outflows of close to around $350 to $400 million. This is as per a Nuvama alternate research note. So we'll keep an eye out on that. In terms of flows, it'll get skewed because of that. Zomato is one of the stocks that I pointed out earlier today as well that is expected to see some outflow. So India, as a basket, will see net outflow. So that's what could skew numbers on the flows picture and also maybe particularly towards the end of the trading session.
All right, Nigel, thanks for that. So just a couple of seconds to go for market open, and we'll just look at indices and we'll get down to stocks very quickly. So what do we have? 24,812 is the pre-open end. It's slightly higher, 24,840. So absolutely flat. Nifty Bank is up about 0.25%, 55,680. Sensex is again flat like the Nifty. The small cap index is better, 1/3% higher, 17,946. And I think you will have the small cap index, which is the mid cap index, will come up on your screens. So it's actually neither here nor there. It's almost unchanged, at least on the headline indices. Mid and small caps, much better start. 1/3% of the mid cap index as well at this stage. Look at the advanced decline. It's 2:1, comfortably 2:1. But this is stuff right out of the gates, and things will settle, and there'll be reversals and reversal to reversals. So I think 30 minutes out, market breadth will be a better indicator. That's the Nifty heat map. 20 odd names are higher. Everything else is starting the day down. Surabhi.
Okay, let's look at what's working and what's not. Index is completely flat. On the downside, Infosys about 1.5% lower. HCL Tech slightly lower. Tech Mahindra lower. So Tech, it's a down morning. Bajaj Auto is reacting negatively to the numbers. Remember, it's what we've been discussing with Jay throughout. That margin being at 20% is nothing new for the market. We've gotten used to it. It's volume growth, it's top line growth, and that seems to be a little sluggish. So about 2% lower on Bajaj Auto. Eicher Motors, Hero Motor Corp also lower, to be fair, along with Mahindra and Mahindra. So all of Auto is seeing some profit taking. So Tech and Auto is lower. On the flip side, Coal India, 0.5% higher. Geo Finance is seeing a little bit of traction. Adani Ports, Apollo Hospitals, and ONGC. But it's very, very quiet out there. There's not much moving. On the banks, HDFC Bank is keeping the flag flying for the bulls for what it's worth. About 0.3% higher, but it's not really enough. Axis Bank is a little lower. ICICI Bank has got a little bit of red tinge on it. And State Bank of India is absolutely flat. Banks are totally undecided. Basically, the Nifty is again doing what it's done the whole week, consolidate with zero direction. Nigel.
Well, that's right. A few numbers, though, are standing out. You have Suzlon that's flying away in today's trading session. It's up more than 10%. So that's the blockbuster earnings of the day. You have Lumax Auto. Well, that stock as well is up close to around 8-9% as we speak. So that is well reacting to its numbers. EIL, Engineers India. Well, that one, in fact, has spiked up. Good move is what we're seeing on that particular name. So let's get that stock as well up for you on the screen. And Equinox. So quite a few winners actually that we're seeing on the screen. Many of them doing very, very well. On the flip side, you have Jagran Prakashan. That's down close to around 8%. So that's coming for a hard knock. You have Landmark that's down close to around 6% as we speak. Popular Vehicles as well down close to around 5%. Ola Electric, I think you already pointed that one out. That as well is under some pressure. And Shalby, that's another one that's lower in trade. Vectors, it has seen a good run, I think, of late, but that in fact is down close to around 4%. So those are some of the big movers in today's trading session. Plenty of winners, though, and that's why the number of stocks advancing are more than the number of stocks that are declining, and the breadth of the market in favor of the number of stocks advancing. But BSE, that's another one that's up close to around 5%. So BSE has pulled back, I think, all of those losses that we saw. That one's on its way to make a fresh 52-week high yet again.
All-time high, Nigel.
Yeah.
BSE is at all-time high. So it's a 5% pop. Number 2 volume-led gainer on the NSE today, across the board. I think people like Gurmeet, etc., have been telling us that the NSE, the unlisted NSE shares have also, there's a fuse under the NSE shares as well. But that's unlisted. But this is listed. You can see what's happening here.
I'll give you a data point on that. NSE now, you look at global exchanges, the total market cap has gone to around $65 billion. So currently it's in 5th position, behind the top names. But in terms of profitability, actually NSE is quite up there because of the recent run from that 1,600 to around 2,200. I'm just pulling out some data. So that's around $65 billion now in terms of market cap. If it lists, it will come in the top 10 end stocks here in India as well.
So 5 lakh crores in market cap.
Yeah.
Last year they did about 12,000 crores in net profits.
Yeah.
40 times earnings.
Yeah.
So it's not
cheap.
It's not cheap anymore.
Yes.
But the thing is, people are looking at it's like
when it lists.
No, it's like both one looking at the other looking back, and then it's. But in any case,
rising together. In any case,
a much bigger exchange in that sense. But yeah, BSE of course is doing very, very well. Suzlon is up about 10%. Swiggy is up 2%, 335 on Swiggy. That's a very large volume-led gainer this morning. EIL is up about 5%, 230 on EIL. Concord Bio has been doing well, and Concord Bio is up another 4% this morning. Zentech is up 3.5%. Inox Wind and Sobha. Techno Electric has seen a bit of a rocket-like move this week, I think. It's up 25% this week. Oh boy, it's a big one. Coromandel is up 1.5%. Senco is up about 3.5%. So yeah, it's lots happening as far as the broader space goes. Mazagon is down 7%. Garden Reach is down 3.5%. Bajaj is down 2%. Infi is down 2%. Cochin Shipyard is down 2.6%. So, I was just talking about Cochin earlier. Numbers, the earnings have been brought lower by the street. People who cover, analysts who cover, the stock's gone the other way. Today it's taking note, I guess, after the Mazagon numbers. So that's the start. Birlasoft, Rima was pointing out, 3.5% lower. And Nibe, which is a defense company, is down 5%. It's coming out with volumes. And I was reading they've got some order with from an Israeli company, tie-up order. So that's some 60,000 shares, 5% down. We have Karthik Kumar, who's with us, fund manager at Axis Mutual Fund. Karthik, good morning. Great to have you with us here. Thank you for your time. We've been in a bit of it's broadly been good. There's no two ways about it. I think, 6 weeks now, at these broader markets, with breaks in between, a week or two, but otherwise steady, and the direction has been north. What's your sense, Karthik, from here? Is there enough in the tank for the market to sort of keep pushing up, pushing higher?
Mm-hmm. I think what's happened is while the earnings season has started on a good note, where we have the number of stocks beating estimates have been substantially higher, but that comes with the caveat that the earnings estimates were kind of well managed going into the season. Our estimates were, the expectations were quite low. So that helped. Also, the fact that we had a correction previously, which meant that we had room for a rally. So now we are back to valuations, close to peak valuations, what we saw in September 24 across large, mid, and small. So I think for this to keep going, we would need improvement in earnings sentiment. We would need upgrades in earnings for FY26 and 27. And I think that will come a bit down the line. When things improve for multiple reasons. But in the interim between now until earnings improvement kicks in, I think the market is more likely to be range bound. Having said that, we've seen risk appetite improving, which is why the breadth of the market, as you pointed out, has been doing well. And small and mid cap in general have been outperforming large cap. So the risk appetite has improved. But for the entire market to move to a next level, I think would require earnings support from here on.
Okay, all right. Hi, Karthik. Good morning and good to see you. When one theme that I think you were quite overweight on was the pharma as well as the healthcare sector. That continues to remain your top weight?
So pharma, healthcare, we continue to remain overweight. I think there it's a case of expectations as well. The sector had underperformed previously, given the uncertainty, especially policy-induced global uncertainty coming from US. And I think as that clears up and expectations there is more visibility around that, I think that sector should continue to do well, which is why we continue to remain overweight pharma in general.
Overweight on pharma. Got that. Karthik, hi, morning. Thanks for joining in. So, what's the sense, if I talk about a broad strategy from here, because the global picture is still very, very murky. In general, the sense is that domestic macros are looking very good, whether it's the liquidity conditions, expected rate cuts, a bountiful monsoon. So, what's the best way to play the market, say, over at least the next 6 months, if you are to gear your portfolio to capture some of this, positivity? What would be your top plays or top sectors?
From a style perspective, I would say what's happened over the last 4-5 months is essentially markets kind of penalize growth, because there has been why growth stocks, however you look at it in terms of expected growth, or if you look at earnings revisions, markets not really rewarded these stocks because market has been skeptical of the growth picture in general, given the uncertainty, especially emanating from US and tariff related uncertainty. But I think as things clear up, growth as a style will be worth looking at, because at the end of the day, the markets will reward growth, especially in an environment where FY26 and 27 numbers as of today still continue to be cut. As we've gone through the earnings season, the earnings has been cut by around 1%, which is not a lot to put it in context compared to some of the previous quarters. But still, I think markets will continue to value growth. So that's an area that I'd continue to look at. Growth along with quality is something that I would continue to look at from a purely style perspective. From a sector perspective, I'd continue to remain overweight pharma. We also have good exposure to financials. Financials, if you break it down into components, be it banks, NBFCs, or capital market plays, each of these buckets offer their own strengths in terms of be it valuation comfort or growth in case of capital market names. So those are the two areas we will remain overweight. And areas where we would remain slightly underweight would be consumer names, be it consumer staples or discretionary, largely because the earnings environment continues to remain tepid. The growth outlook also continues to be to remain a bit soft in the near term. We expect it to improve later down the year, given the various steps that you mentioned, the reasons that you mentioned. But when it happens, we'll relook at it. As of now, we continue to remain underweight those sectors.
Okay, all right. Karthik, just hold on to that thought. We have some news coming in on Kiri. They'll be looking to sell the entire 37% stake in Dystar Global. You know, the stock actually seeing profit taking. You'll be interested to see how things move from here. They're stated to get close to around $697 million. But keep in mind, yesterday it saw massive delivery-based buying, and the stock ended at the high point of the day as well. So that's why I think sustaining that up move that we saw will be interesting. In fact, as we speak, the stock is selling off. Because of the big move that we have seen in the last few days, it seems the street is already sniffing some kind of good news. And as we speak, a sharp downtick. I think if we can pull up a bar, you'll see that the stock has cracked big time just in the last 3 or 4 minutes from the time that piece of news did come up for you on the screen. Initially, you know, it was read positively, but that bounce has got sold into. Get an intraday chart, just today's chart. That will tell you a perfect picture the way the stock has corrected, because it seems, just take a look at that. Yesterday, massive delivery-based buying, and the stock ended at the high point of the day. So it seems, at least as of now, there's a sell-on news that's playing out on Kiri Industries. Well, that said, Karthik, coming back to you, I think tech was a space that was looking encouraging a couple of months or so ago. But now there's plenty of uncertainty there in the United States. And also we've seen that the rupee actually has stabilized. Normally a weaker rupee is something that makes you more inclined towards tech. How are you all positioned now on tech?
Depending on the funds, we are around neutral to slightly underweight tech. Obviously, the positioning would depend on the individual mandates as well, but that's largely how we are positioned. It's more a bottom-up allocation within tech, where we have comfort around some of the mid-cap names within tech and specific plays in large caps as well. So it's more of a bottom-up stock play. The catch there is that while there is uncertainty, the sector has already corrected a fair bit through the year. And the expectations are also not very rosy. So in that context, things at least have a low base. So that's something worth looking at over the next few months.
Okay. Finally, just a word, Karthik, because next week it's the RBI policy, and you know, one is still expecting more rate cuts this year, right? On financials, what do you like the most, and are there any segments that you would avoid? I mean, for instance, let's say capital market plays. I don't know if you still think there's more upside, but just give us a broad overview of what you're doing here, lenders and non-lenders, both.
Okay, so within financials, we like large private banks, and we also have exposure to NBFCs. And within capital marketplace, as you touched on, we are quite selective because valuations in some of the cases are quite rich. So it is very specific at this point, and it is not as broad-based as, let's say, 3-5 months back within the capital market space.
No, absolutely, and it's a space which, of course, has done so well, and really a consensus kind of overweight for many in the market out there. So I just want to quickly look at a few other names. Seems like it's turning out to be a bit of a PSU move as well, right? I mean, so just look at these names. EIL was not there in the mix when we started in the morning. It's up 8% now, EIL. It's got large volumes for this point of the day. I don't see it very often here. The other one is MMTC, 8% up. It's the fourth largest volume-led gainer. That's why I'm saying these are not names you're used to seeing at 920, 925 with these kind of volumes. So EIL and MMTC are two names which are coming through with large-sized volumes and gains as well. Olectra saw a bit of a dip on adverse news flow. It's back up about 4% right now. There is Newgen, which is up about 3% or so as well at this point in time. So that's the broader kind of picture that we are working with right now. Within Karthik, within the pharmaceutical space, and we had one company from the CDMO API, Cohance, earlier on earnings. Anything you like in particular?
We are looking at more generics and APIs focused on US, and there are a couple of companies there where we have reasonable exposure domestic markets. So that's the space that we are looking at, and some hospital names in there as well.
Okay. We'll leave it there. Thank you very much, Karthik, for joining us. Appreciate it, and good speaking with you. Now, the Finance Ministry has told the Reserve Bank of India to ensure interest of small gold loan borrowers are not impacted by the new draft guidelines. My colleague Sapna from Delhi is joining in with this important story. Sapna, good morning.
Yeah, morning, Prashant. So I think this is a kind of not exactly a pushback by the ministry, but it's important to note that their internal views to the regulator have actually been put out in the public domain. I suppose the sensitivity of the matter is such because there are so many small ticket, borrowers under the scheme that the government has deemed it fit to bring it out in the public domain quickly and ensure that whatever guidelines are finally formed up by Reserve Bank are in sync with the kind of feedback that the government has received. And very important, Prashant, all of this has been reviewed at the finance minister's level. So the feedback is actually coming right from the top. And as we have seen in the earlier draft discussions as well, when the LCR issue came up and there were certain other aspects also that were there in the public domain, the feedback of the government has been taken on board by the Reserve Bank. So here, basically, what they're trying to ensure is that whatever restrictions or changes or new ways of borrowing or new terms and conditions that are imposed, that should not impact the small borrowers. Basically, the borrowings with their ticket size of around 2 lakh rupees. And this is also a common kind of a benchmark if you look at a lot of other government schemes which are ongoing. For example, the Kisan Credit Card say, loans up to 2 lakh rupees should have, a higher interest subventions, for example. I mean, it's just trying to ensure that, whatever the guidelines that come in the final shape, sorry, excuse me, they should not impact the small customer. That is
the small borrowers.
That is their exact focus, and that's what they're trying to ensure.
All right. Okay, Sapna, thank you. Thank you very much for that. That's an important update. And, thank you for putting that on the table early up in the morning. So watch this space for more regulatory action on the gold lending side.
I want to say one thing, Surabhi. So the thrust of what Sapna put out seems to be, I mean, if you had to really simplify it through the stock market lens, this is positive for gold finance companies. Because, they're saying, what are they saying? They're essentially saying, do not impede on the small borrowers who use gold as collateral.
And they form the bread and butter of the customer base of a lot of the gold finance.
So for gold finance companies, I mean, actually, if anything, if you had to sort of, distill it down to incremental positive or negative, I mean, this is positive. Go on.
Okay. All right. Well, back to earnings then. And the next company on our radar is Bajaj Auto. Q4 results were very steady. They were in line with street estimates, and margins continue to remain above 20%. And this is actually for the 6th straight quarter. Let's take the discussion forward with Mr. Rakesh Sharma, Executive Director at Bajaj Auto. Mr. Sharma, good morning. Thank you very much for joining in. And let me start by complimenting you and the team. I mean, 20% plus margins, 6 quarters in a row, through all the ups and downs of the economy and, currency and whatnot. So kudos to you. Now, that's the good. But my first question is going to be on the challenge, which everyone's talking about in the market. And that is, volume growth and market share. Market's very happy with your margins, no problems. Everyone's saying, what about more volume growth, more market share? Because in your bread and butter segment, the 125cc plus, there has been, a couple of basis points dip in market share in FY25. So what are you doing about it now? And what's your expectation on both volumes and market share in FY26?
Good morning. And yes, thank you very much for your generous comments. And to also keeping the margins steady when the electric business is growing from like 10% to 20% of our domestic revenues also required some management. And you have rightly highlighted one of the important areas which the management is focusing, which is the market share in our core focus area, which is the 125cc plus segment. We are hungry for more. There is no doubt about that. But let me put it in perspective. This segment started to really grow, surge forward just around post-COVID and the post-regulatory things which had happened. And at that time, let's say about 3 years back in FY21, our market share stood at around 20%. These are estimates based on registrations. And that by FY24 end went up to 25.5%. And we feel that in FY25, we have probably, particularly in the second half or in the middle of the year, lost about 1.5 percentage points. So that's the perspective from 20 to, I would say right now, about 24. But we would rather look squarely in the mirror and be hyper about even, a decimal loss, because our intention is obviously to strive for leadership in the segment. We are a steady number 2, at least 50% ahead of the number 3, number 4, and and behind the number 1 by at least about, I think, 5-6 percentage points. So we are striving. We would continue our thrust based on new products. We've got a good pipeline based on new products, both in the 125cc and the sporty 150cc, 160cc plus segments.
So I don't hear some kind of price action coming in from you in that reply to kind of bump up the volumes, and also just time the volume picture, sir, because I know that in your call you've guided for, the overall industry is saying 5 to 6% growth in two-wheeler volumes this year. How much better can Bajaj Auto do over and above that? And I'm talking about the domestic business. Exports are again firing up. They've turned around very well for you. But let's talk domestic two-wheeler volumes.
Yeah, let me take it one by one. We don't think that the pricing card is a sustainable card, because competition always has the right to drop their own prices. We will use pricing only to calibrate with competition, because if we find that there is a competitor move and their pricing goes beyond whatever premium or discount we can justify in our portfolio, then we will adjust. But we do not subscribe to the option of using pure pricing to acquire market share, as it is not sustainable. And as you know, we are always balancing between growth, market share, and profitability. Going forward, I would say from an industry outlook, it's looking like what it was in FY25, which is about 6%. Quarter 1 last year was 11%, then that dropped down to 2% growth. Then the festive was very, very bright, particularly October, and quarter 4 was, mildly negative, -2% or so. Registrations came in negative. But overall, the year was about 6%. I think the same pattern is going to continue. we are going to see this kind of a growth, but that growth might come in very, very different shapes and in very different regions.
But how much above industry, sir, but how much above industry will Bajaj Auto grow at in terms of volumes this year in two-wheelers?
Yeah, I was coming to that. One thing is, which has held steady, is that the 125cc plus segment has outperformed this 6% growth. It'll probably be between 8 to 12% growth, and we would be looking at growing faster than that.
Okay, so 125cc industry-wide is growing 8 to 12%, and Bajaj would want to grow even better than that. So one more point on
125cc plus. That means
125cc plus. Yes, which is your core segment, which is your target addressable segment. So you should be growing more than 12%. 12% is industry growth. Bajaj should be growing above 12% this year in that particular segment. Got that point, sir? Just very quickly on KTM, because that's a sort of strategic move that seems to be shaping up as well. Since we're talking, motorcycles, I think the intent is very clear that Bajaj Auto wants to take now, ownership. You've made several moves towards that. What should we expect in the turnaround from KTM? I think this particular quarter, you had stopped your exports, as far as this JV is concerned. What's the expectation from KTM in FY26, and what happens in terms of taking that ownership control?
Yeah, so there are two sets of actions. One is, of course, to solve the liquidity issue and pay off the pared down debt. As you know, that creditors took a 70% haircut, and there was a court supervised process which required this commitment to be made by 23rd May, which has been made. And the second aspect is the intention of Bajaj Auto to take majority control. I must say that this is subject to regulatory clearances, both in India and overseas. This is our intention. We have made that clear, and we are in the middle of the process. Till these clearances are secured, everything is at standstill in the sense that management structures and management is being conducted the way it was. Once these clearances are gained, and we will truly then start to put shoulder to the wheel along with the KTM to make the turnaround happen. The exports, you're right, because of the liquidity situation, were curtailed last quarter, even though there's some very, very healthy demand. But with the liquidity improving, exports has got unlocked. We have already started exporting April onwards. And, April, May, and June. So we will have exports this quarter and, of course, next quarter. Our exports to KTM in normal times would be about 6% or so, but they dropped to nil.
Okay.
And so, therefore, you will see, this positive support to our exports growth.
Sure.
KTM this quarter onwards.
Okay, so just a 20-second answer. I'm apologizing. We have other managements waiting as well. Just as the EV portfolio ramps up, will you manage to retain margins at 20%? And what's the ramp up in EV volumes? Just very quickly.
Well, the EV volume should ramp up. The margins are a consequence of many things. We will have to, our intent is to keep managing dynamically, but the dollar is the rupee is appreciated against the dollar. There is some marginal headwinds when it comes to the commodity and the material cost inflation, and we have to watch competition. The intent is to keep the margin steady, but there are some headwinds, particularly from the currency side going into the quarter.
Okay, so we'll watch out for them. Thank you very much, sir, for joining in. Good conversation. Thanks for giving us an overview for the year. Need to take a very quick break right now. Come back on the other side, and the management of Welspun Living will join in to give us their perspective on FY26.
Welcome back. This is Corporate Radar, and as promised, let's get straight to our next management. Welspun Living reported a muted showing in the past quarter. The year on the whole as well was a little bit subdued, a little lower than what the management had guided. Mr. Dipali Goenka, the Managing Director and CEO at Welspun Living, joins us on the show. Good morning, Ms. Goenka. Thanks a lot for joining in. Well, let's talk about a couple of numbers and the outlook for your company. Now, your top client, one of your top clients, Target, they have cut their full-year guidance. While the Walmart CFO, they are talking about price hikes because of tariffs. In this sort of challenging backdrop, for your company, what kind of revenue growth can you deliver as well as margins? Let's get both these two numbers out and we'll delve a little bit more.
So hi, Nigel. Glad to be here. I just wanted to give a perspective here that the markets are going to be dynamic, and we all know that the global landscape looks very, very uncertain at the moment. It's a matter of, a couple of maybe quarters when we'll get a clear visibility of where we stand. Consumers continuing to go to buy. There might be a kind of a dip of around a couple of, percent where they'll not buy that much, the discretionary spends. But this could be just an uncertainty for a couple of quarters. I think that's what we are seeing as a world. However, when I talk about us as Welspun and I talk about India, India has a great opportunity. Look at, the FTA that's happened for UK. That's a great opportunity. And with Welspun as well, our portfolio has increased to around 35 to 40% on the rest of the world, apart from United States of America as well. So I think I'm looking at both sides as well, because there's an opportunity to grow markets in UK, Europe. FTA is just right around the corner. And that's where I think could be a great opportunity. India, you started seeing the green shoots in the terms of consumption. So definitely that's what we are actually looking at.
All right. You want to give us a number? What would an aspirational revenue growth be for the year, as well as outlook on margins?
You know what? That's going to be something I really cannot, because I think quarter one, quarter two is going to be very dynamic at the moment.
Okay, all right. Your exposure, let's talk about what you just spoke about. Your exposure to UK, I think, is a little south of 10%. I think it's around 9%.
Yeah.
How do you see revenue increasing post this UK FTA? And also, since you're sounding quite optimistic, have there been increased inquiries from the current as well as new clients?
This whole aspect of being, having a back foot as a country from Pakistan and Bangladesh with a kind of a delta of around 12%, actually India stands to gain. So while we can say that we were growing at, like a 9% kind of a market share, or of our pie in the terms of UK, but this actually gives us a delta for a huge kind of product portfolio that Welspun makes. It's not just going to be bath towels, but sheets, bedding, rugs, carpets, flooring, advanced textiles as well. So that's the kind of a landscape that we see, and it's a huge opportunity. And, the whole thing is that, a few retailers that, we talk about, but it's an entire landscape that opens up, which actually is huge, which starts from the hypermarket to the better and the best as well. So, yeah, that's a huge landscape that will open up because of the FTA benefits that we can actually now move to and cater to as well.
And maybe other FTAs are also coming. I mean, it's all moving towards bilateral one-on-one instead of these multilateral arrangements, and we'll see if you benefit out of it or not. Dipali, good morning. Prashant here. Could you quantify that size of opportunity for Welspun because of this UK FTA?
Quantification, if I talk about, is not something possible. But I think when I talk about, in the terms of a top line and where we are today, we can actually definitely see this market share grow. And I think when we used to talk about earlier, US used to be around 80% today in that big pie of ours that we have of over 10,000 crores now. I think US is now around 60%, and the rest is the rest of the world and India as well. So that's where you can see this grow. We have a North Star of around 15,000 crores that we're targeting as we go forward. So yes, you can actually calculate what it could be.
So FY28 guidance sticks to that you're approximately $2 billion, 15,000 crores of revenues with around mid-teens margins, 15-16%. Is that correct? FY28.
Absolutely. And where brands will also play a very big role as well. Let me also tell you that, because right now today as well, we are around, contribute around 15% of our top line with our brand portfolio that we have.
Okay, all right. I wanted to ask you a couple of more questions with regard to this top line itself. The flooring business, that's a little disappointing, right, Dipali? I'm sure you would have liked to scale that up a little bit more. Yeah. How do you see growth for the floorings division move up? And also on advanced textiles, it's still a smaller part of your business, but giving you very good margins.
Yeah.
So what's the guidance on both these two segments?
So I'll tell you one thing. Let's talk about flooring first. And yes, it has degrown this year. But I think the opportunity here really plays strong in the terms of even hard flooring, because here is where the China Plus One is literally playing right now. So definitely that's what we are seeing in the terms of a hard flooring. Now, when we talk about the soft flooring here, the opportunities have opened up, not only, where we talk about now we have the home improvement retailers in America, in United Kingdoms and Europe now with the FTA happening. That again will be a huge opportunity. Hospitality, and also the commercial space in the United States of America. India, actually, we have grown by 12% this year, and that again holds a very good opportunity here. It has been a very steady kind of a growth that we've seen. But I think, having said that, this is one of the most modern plants and only plant in this side of the world. So definitely, we are going to take that little burn and grow at a steady state. When we talk about advanced textiles as well, I think I can tell you now, we are moving upstream in the terms of innovation. Apart from spunlace now, we are looking at an opportunity to sell jackets, which are like, innovative jackets with one of the big retailers in Europe. We are also looking at wipes, dry and wet wipes in the United States of America. That again is a huge opportunity that opens up because of the other countries. I think India gets that edge there as well.
Okay, give us a number though. Advanced textiles, currently I think it's doing ballpark 500 crores, if I got that number correct, with margins of I think more than 20%.
Yeah.
Where does this number go? Because you're saying it's a big opportunity, but you're falling short of numbers. So in the next 2 years, where does advanced textiles go? And what kind of a revenue growth can we see for the floorings business, say on an average for the next 2 years? These two numbers and we'll wind it up.
So I think the flooring, let me start with flooring. Flooring, we've actually looked at a growth of, with the kind of right now, the capacity is at 60%. We will grow it around over 2,000 crores. That's where we see the flooring business go to. Our advanced textile will go to around 1,000 crores in the next 2 years. The opportunity here will be to add on more value-added products rather than just doing commodities. And that's where, we will see an advantage. This quarter, we clocked a good margin of around, say, 18 to 19% in advanced textile. So I think you can actually look at that we can maintain this along with adding on more value-added products in advanced textile too.
Dipali, I'll tell you, it's a true story. By the way, the flooring is really cool stuff. Stick-on flooring and a lot of the, but I think maybe it needs a little more awareness. You need to spend more.
Yeah.
I'm suffering nowadays with with a lot of work happening around me at my home. So I've actually sent suggestions to my neighbors to use the stick-on flooring and not go,
You let us know that.
banging. So
we'll be there.
I think all right. Thank you very much, Dipali. Great speaking with you, and good luck with all the businesses that you're excited about. Thank you very much.
Thank you so much.
Okay, let's just now take it to our next management, which is with us. And this is Samvardhana Motherson, which reported a healthy set of numbers. Revenue growth came in good. Lower tax expenses added to their profits. Let's discuss this more with Pankaj Mittal, Chief Operating Officer, and Kunal Malani, Chief Financial Officer at Samvardhana Motherson as well. Pankaj, thank you very much for joining us. Kunal, thank you very much for being here as well. Prashant this side. Pankaj, I want to straight away sort of dive into the, not the main automotive business, but the consumer electronics business, Pankaj. And it's an area where you guys are very bullish about. It's a large opportunity. It's the right space. You guys work with Apple as well in terms of supplying components. How after the recent, I don't know how much you can sort of tell us, but I'll have to ask. We heard President Trump essentially asking Apple to come back to the US, to make in the US. Have you heard anything from them? I mean, I think they're, of course, making out of Chennai, down south, now I think Bangalore, and there were reports they were scouting for another sort of facility in the north of the country. What have you heard from them, if anything at all?
Good morning, Prashant. Thank you for having us with you today. As far as we are concerned, whatever we are doing in the consumer electronics business is on track. So as we have mentioned in our presentation also, we are accelerating production and capacity. One of the plant is already operationalized with a sharp up ramp-up capacity to supply to about 15 to 17 million units. 2 more plants are in place coming up, one in this year, in the next few months, and another one in 27, which will be even a larger plant. As we intend to do what we are doing today, we intend to also do vertical integration and add more value. So our plans, what they are for the consumer electronics business, are on track.
Mr. Mittal, just to understand, can you give us a sense at a blended revenue level, how much of your revenue, say by FY27, maybe that's a better year to look at, or maybe FY28, how much of it will come from the consumer business? Just want to understand how the revenue mix will change 3 years on.
This is still something which is in the offing because there are lots more to come in this sphere. So as we move forward in this area, we will come back to you with a number. As far as current business is concerned, we had indicated an investment of about 2,600 crores into these 3 facilities, and more will come. We are not at liberty to disclose at the moment the revenue figure.
You know, you said that there is enhanced engagement, new product evaluations are underway, etc., etc. With regards to, of course, the customer that I mentioned, is there any? It's all on track, sir. Have you heard anything at all? Or will, in your assessment, even if you've not heard, do you think exhortations by the president in the US will slow down plans to make more here?
Well, as we had mentioned in the very beginning, that this is a business which we are doing with a partner, with Beal. As you would know, that they do multiple products.
Yes.
And the kind of business which they do, so it's not, there are multiple customers. And as we have been maintaining that there are, we have non-disclosure agreements with various customers with whom we deal with. So we are not at liberty to disclose something more than what we have disclosed so far. I think this information which we have provided in terms of our greenfield sites, in terms of vertical integration, and that our business is on track should be good enough.
Okay, all right. Hi, gentlemen. Good morning. Thanks a lot for joining in. Well, the street is optimistic, and you all as well have mentioned numerous times that the content per vehicle is likely to improve because of premiumization, electrification as well. Could you give us a broad number? What is it at currently? And where is this number headed to, say, in the next 3 years?
In terms of our content, you could see that from the product profile which we have provided. So you see that we were primarily one product maker, and today there are so many different products which are coming in. And they come in at the behest of our customers, both by doing ourselves or through acquisitions or ventures, which we have been partnering with technology providers around the world. We added new partners. 23 new acquisitions were done in the last period, as we have mentioned in the last 5 years. So you see that there is a huge amount of new products like sunroofs, we have fuel tanks, we have multiple products, integrated assemblies. So that's how we keep adding the content, and that's the way in which we will continue to do in the future as well.
Yeah, but do you have a reference number, sir? We get that. I've said this a couple of times in the past as well. You're getting into better products, etc., higher amount of premiumization. Do we have a reference number to work with on a content per vehicle as of now?
See, we are not, what you have to look at is that we don't supply to every model all the products which we do. So it's a huge spread. It's about being a solution provider to our customer. So that's the quest. So it's a direction in which you could do more and more. And the company has also diversified, not just into the automotive side, but also into different industries. So you see, we today support the aerospace industry. We do the rolling stock industry. We are into the consumer electronics. So that's the way for us. And when we do integrated assemblies, there is a huge amount of potential in the market to do multiple things. And new products like we are doing now for companies which make machines for equipments for silicon wafers, we're doing products for them. So it's a journey in which we keep finding more and more avenues to support our customers.
Sure. All right. Got that. Let me come to Kunal as well for some questions. Kunal, on the here and now, the P&L for the fourth quarter, your overall revenue grew about 6%, but blended margin was under a little bit of pressure. And I think the bulk of that pressure came in from your modules and polymer products business, where margins have come down from double digits, almost 11% to about, I think, 6.5%. while the margins for the wiring harness business are improving. So can you just walk us through whether this was a one-off pressure in your modules and polymer business? What's the outlook for both wiring and harness and modules and polymer for FY26, especially focusing on the margin?
You're right. Our module polymer business did have a margin decline. And this was largely on account of the volumes dip that we saw in Q4 for the European side of the business. There was a 9% volume dip that we saw on the European side, which wasn't really expected. In April, you would have seen we've also announced a transformation plan in Europe in order to take out around about 50 million of costs in the next year or two. So we saw the market decline and started recalibrating it as we moved down the path. Now, as you know, and we've always spoken about, it is always better to look at us from a year-on-year basis.
Sure. So yeah, just year-on-year margin outlook and revenue outlook as well, if you can, Kunal. You grew 15% last year. I think 8% was organic growth, rest was acquisitions. So just very quickly, FY26 revenue growth outlook and margin outlook.
I think one, on the revenue side, we should do better than where we are in FY25. So I think we should do better than where we are, even though the market backdrop seems to be a little soft on production and tariff uncertainties. When we look on the margin, we've always said don't look at the percentage margin because there's a lot of moving elements on account of commodities, etc. So on an absolute basis, we still hope to deliver a better result than FY25.
Absolutely. Just one last question here, Pankaj. I think you've said that you are open to customer-supported M&A. There is also this news flow around Marelli. So you reportedly made a buyout offer for them. This is new information. Anything you can tell us, Pankaj?
We have already given information to the stock exchanges that there are various discussions which we do with multiple companies around the world. So as soon as something on any particular acquisition gets fructifies, it will be informed to the market immediately.
That's the standard answer. And I think you would give us nothing less. But would give us something. I mean, so you are obviously talking in that sense, right? And should we hear something soon?
We talk to multiple companies. So, M&As are something where unless and until something gets fructified, very difficult to say something.
Yeah, and you've done a string of acquisitions over the years, lots of them around the world. Pankaj and Kunal, thank you very much for joining us. It's a pleasure having you here on CNBC-TV18. Good luck, and I hope to speak with you again soon, especially around news flow coming through with regards to the consumer electronics business, Apple, as I began the conversation by saying, being very closely watched for any signal if they or other global large companies slow down their plans to build more here. We'll take a quick commercial break here. We're going to come back and we'll focus on one of the top gainers of the day today, Suzlon. Stock, the last I checked, was up over 10%. We have the management with us right here in the studios, Mr. JP Chalsani and Himanshu Modi, both here in just a bit on the other side.
Welcome back. As you can see, the next company on our radar is Suzlon Energy. We have the management right here with us in the studios, and it's been a blockbuster quarter, a great solid end to the year for Suzlon. Stocks right now is surging almost 10% higher last time I checked. So let's just quickly revise the numbers. 73% revenue growth, nearly 100% jump in profits. So let's find out what's working for the company and what the outlook is like. We have the company's CEO, JP Chalsani, as well as CFO Himanshu Modi right here in the studios to talk about the performance. Gentlemen, thank you so much for joining in. Great to have you on. What a blowout performance. I mean, top line and bottom line. I'm just looking at where you are. I think the wind turbine generator order book is about 5,555 megawatts. As of May 25, deliveries have been fantastic. Mr. Chalsani, I mean, tell us if this blockbuster performance kind of continues into FY26 also?
Yeah, I don't call it as a blockbuster. If you say that the last 24 months, quarter on quarter, we have been working hard to consolidate in various areas. You have seen us doing that on balance sheet. You have seen that doing an order book. And in fact, today we sit with 2,000 crores of cash instead of a debt on the book. And then we worked on organization, people and leadership. And that's what is actually showing the results today. Okay. So I think this is a result of, you've seen it's quarter to quarter. It's not just suddenly jumped up. Even in the quarter 3, if you see, we've done well. We reach a stage where now we believe that, yes, we are now in a position to continue to have this growth and then meet what are the stakeholders' expectations from the sector and from the Suzlon.
So what's powered the performance in Q4? I think one is higher than expected deliveries. Most estimates in the streets were lower than what you've actually accomplished in terms of just more deliveries. And then the margin performance is also what the street really likes. I think the gross margin itself has gone up. So Himanshu, you want to comment on this, on what's driving the margin and whether this run rate of deliveries is continuing in this year as well?
So clearly, the larger theme that at play is, which we maintained all the time, that the economies of scale have now started to kick in for the company. It's early stages still. We've seen Q3, we saw some early signs. Q4 has, of course, seen, as a report, good gross margins on the WTG division. We've had about 23.6% gross margin on the WTG division. And we've always given guidance that close to 20%, but we've been able to exceed that by about 3.5%. And I think going forward in FY26, we are confident that we'd be able to maintain those margins for the WTG division at the gross margin level.
23% gross margin.
Yes.
Got it.
All right. Hi, gentlemen. Congratulations on a solid showing. Let's talk about the industry first up. There is that fear with regard to installations. I think for the last year, the installations moved to around 4.2 odd, if I got that number correct. For this year, for the industry, what kind of installation numbers are you looking at for the industry first?
Yeah, for the industry, I think we've been growing consistently. Yeah. Like if you look at FY24, it was 3.2 gigawatts, and we had a 28% growth in FY25. Moved to 4.15 gigawatts. And then our expectation is that in FY26, the current year, it would be 6 gigawatts plus. And then this will keep, I said that last time also, it will keep going up. And then we should peak around 9.5 gigawatts. And the target of 2030 of 100 gigawatts, fine, we would be somewhere closer. I mentioned last time we should still be closer to that. So therefore, we'll continue to see the growth in sector as well. Okay. At this year, like we are expecting 50% growth compared to last year to this year on the capacity additions, purely because the issues what were on the ground in terms of the land, in terms of the evacuation are getting sorted out. I'm not saying they're sorted out.
But they're getting sorted out.
But they're getting sorted out. So therefore, you would see the traction. In fact, as we were talking some time back, in April itself, first month of this year, we did 1 gigawatt, which has never happened.
Okay, all right. So that's for the industry, right? 6 gigawatt. Now, will you all maintain your market share? I think, sir, you know what's coming next. Last year, you did around 1.55. This year, just going by mathematics, last year it was around 37% from Suzlon. So 35%, is that a ballpark number we should work with in terms of as a percentage of the 6 gigawatt?
No, 6 gigawatts is a commissioning.
Yeah, commissioning.
So, and then 1.5 gigawatt, what we're talking about is supplies.
Yeah.
So the obviously, for the first time in our history that we gave a guidance saying that in FY26, we will grow by 60% minimum across the board. So that is not just giving a guidance of a number, and we are able to give a guidance for the first time, shows that we are now well prepared as an organization to see the future. And we would continue to grow, and we would continue to maintain that market leadership. We are pretty sure.
So
and the numbers wise, I'm not going to give exact number, but we said that 60% is what growth will see.
60%, just to clarify, I want to understand this. This is a 60% growth guidance across several parameters. Deliveries, revenue, EBITDA, all growing at 60%.
Yeah, except the commissioning, which would be 3 to 4x.
Right.
Not just 60%.
Okay, let me, gentlemen, morning. So while you continue to execute, is the sector also growing, or you think it's, power demand has been kind of weak, right? This year, the last year, maybe it'll pick up over a longer period of time. And the second point is, we've been hearing more and more that PPAs, there are lots of delays in terms of PPAs being signed, is exactly because of these reasons. There needs to be demand revival. Is there a problem at all?
Yeah, I think Prashant, the demand being there or not being there is a bit difficult situation in power sector to understand. There is a demand in terms of energy. There's a demand in terms of megawatts. Okay, these two are two different things. If you look, because generally people are commenting today in the daytimes during the solar hours, we are seeing the demand not being there. In fact, the supply being more than the demand.
Correct.
Okay, that's the reason you're seeing in the exchange, the prices have come down to zero. Not only that, the grid frequency is going up during that period of time. But having said that, in the evening peaks, we are expecting shortages, continue to expect the shortages, and that's growing. Even if you look at on the exchange, it's growing. So when you look at even the energy demand is expected to grow around 5.5 to 6%, energy demand. So therefore, there is a demand. It's a question of at what point of time in a day in your load curve, what you need. So therefore, there could be a subdued demand for solar, but there will continue to be demand for the products like combined solar, wind plus storage, or the wind plus storage. That will continue because during the wind generation hours, the demand is growing. And that is reflected in the prices.
There is no issue if, there's storage there as well, right? What you're saying is when the sun is shining, there is enough demand, there is enough supply, so prices are low, but then peak later evening hours is when the demand picks up and...
It's exchange shows those prices. So therefore, I think it is nothing to do with the solar or a wind or the storage. You have, in our country, we have a demand in a particular pattern. Okay, and you need to come out with a product which meets that load curve. So that could be the solar plus storage plus wind. It could be wind plus storage. It could be different things depending upon which state has what sort of a deficit at that point of time. The demand is there. Energy demand is there. So energy-wise, we have continued to grow at 6% level. There will be demand. There will be products which are different from the pure solar sort of thing. And there will be products which will have a combination of wind, solar, and storage at different levels, depending upon who is asking for what product. You have to design your product for that. Today, we talk about FDRE. There are 8 to 10 different types of FDRE. Okay. People talk about FDRE, but there are 8 to 10. Today, the customer demand saying that this is what is my load profile. Even if you look at the industrial segment, which is what is the maximum customer for us in terms of 55% of our order book comes from there, they have a demand profile. If I'm a cement industry, steel industry, I have a demand profile. So as per the demand profile, you design what capacity is needed in what combinations. That's going to be there. And it will never ever be in our country, if you're assuming that we'll continue to grow, and from fourth position to third position to second position economy.
It's only the rate of growth I was referring to.
Rate of growth of energy from the electricity point of view, in million units point of view, there'll be at least 5.5 to 6% growth every single year.
Okay, just very quickly, the 60% growth that you're talking about and the improvement in deliveries and commissioning, which could be 2-3x, you're saying. I just wanted to understand, where's the bulk of the demand coming from?
If you look at our order book today, the significant portion comes from C&I, which is about 55% of our current order book. And the second one, which has grown significantly during this year, is a PSU segment, which has now grown to 26%. Then you have the big portion of bid PPS. That's the reason where we talked about PPS not getting signed. But that's about 20% for us, 20-21% portion of it. So that's how it is. So therefore, the PSU segment is growing, and the C&I segment is growing, and we will continue to grow. We will continue to grow.
Okay. All right, gentlemen, thank you very much for joining us today. Great to have you in person, and good luck. It looks like a solid year ahead for Suzlon.
Thank you so much. Thank you. Thanks for having us here.
Thank you. Thank you.
Thank you.
Well, with that, we have to slip into a very quick break. As we take that break, just a quick glance at the market. Market's not doing anything. 30 points lower on the Nifty. Consolidation continues. We take that break, and coming up on the other side, our special segment, it's the economy. Lata today gets chatting with Ramesh Chand, member Niti Aayog, on the impact of early monsoons on the Kharif crop and the impact of MSP on rural income and the state of the upcoming Kharif season.